It's January 11th, so it's literally the second week of January. Of January, the second week of 2022. So it is still really early to actually look and see and try to get a preview of what 2022 on the stock market might look like. But based on what already happened so far and based on what we are anticipating to come, when you look at what the central bank is doing, when you look at some of the stuff, some of the words, some of the predictions that some of the experts and the big banks are saying for what to happen or what to expect in 2022, we might get a preview, we might get a direction, and actually that will help you if you want to see exactly what to do with your money, if you want to invest in the stock market moving forward. So let's first take a picture of where it stands. Then we're going to get a look at what those experts, those banks, are saying, plus the central bank is doing, especially today after Jerome Powell, the chair of the central bank, the Federal Reserve, said in front of the Senate Banking Committee. And at the end of the video, I'm going to give you my thoughts on what to expect for the stock market in 2022. So first off, today, market kind of rebounced a little bit, because if you look at what the market have been doing for the last 5 days, this is, January 5th, we were at all-time high. And since then, boom, everything went down. Dow Jones lost 3%. If you look at the NASDAQ, it's even worse. This is the S&P 500 on the last 5 days. You can also see that, all-time high, boom, 4%. And the NASDAQ even worse because, interest rates increasing usually is not a good thing for these the stocks in this stock, in this composite, this index, 6.3%. So you can see we are already bouncing back a little bit, based on what the chart are telling us. We are already bouncing up. S&P 500, same thing for the Dow Jones. We have this curve going back up a little bit. Now, this is what the market are telling us while looking at the chart on this, so far year to date, that, hey, we might be at the bottom, we might be at the end, because what triggered this whole thing for the market to drop and causing everybody to say that 2022 is going to be the worst year for stocks than it was in 2021 was the fact that the central bank said we are going to change the easy money policy. We're going to increase interest rate. We're going to remove, reduce drastically the money that we've been pumping into the economy as the stimulus money since 2020. And based on this, investors went crazy. People started panicking. And I believe this was kind of an overreaction, because usually when such things happen, the market will throw the bath water with the baby in it, meaning they will just, start selling, because they want to protect their capital, because what is ahead of them, it's uncertain. And usually when you have uncertainty, people start panicking, so that's why maybe the fact that we're seeing this, trend back up may mean that the bottom has already been reached, meaning we may see now people digesting the information based on what Jerome Powell said back early, last week. And now it gives them more clarity on, okay, where do I need to put my money? In which sectors, in which pockets of the market do I need to allocate my money back? Because today, looking at what the central bank said, again, he was testifying in front of the Senate Banking Committee. And this was ahead of his nomination or confirmation as a nominee, as a chair, the Federal Reserve chair. So he said that we will increase rate, but tighter policy will be needed to control inflation. So pretty much what he said was, first off, we are not going to be as quick as people are thinking. It's going to just be a brutal wave of removing that stimulus money, because stimulus money being removed means it's going to be a lot more difficult for some of these banks, some of the investors, to actually fund those investments into some of the pockets of the market. Not all of them, some of the pockets. Second, he said that we are still looking for full employment. This is the number one job of the Federal Reserve, to seek full employment, meaning to have as much people working in the economy. And with COVID and with Omicron and everything, the supply chain issues, of course, prices are still very high. Hence, inflation is still high, but he also said that we will adjust based on this interest rate, as a tool that we have. If we need to increase, 2 times, 3 times, 4 times, then we're going to do that. But also, if we see that the main target that we have, meaning getting as much people employed in the economy, is not reached, then we might pull back a little bit. And that's what relieved the markets a little bit, as we saw today, with everything kind of, closing on the green session. So this is what the Fed is doing, meaning it's kind of giving a little bit of relief to the investors and to the market and giving them more clarity. Now, moving on to some of the predictions from big banks and big, billionaires on the street. Let's start first with JPMorgan. JPMorgan is one of those banks, like anytime they speak, people will listen closely, all right? Because this is one of the big banks. They manage a lot of money. So they said pretty much, that was on yesterday, January 10. Buy the dip, says JPMorgan. Markets can handle higher yields, meaning when interest rates increase, as the Fed is already signaling to the market and to the economy, then people started thinking, oh, market's going to go down, market is going to crash. According to JPMorgan, they seem to think that markets can handle higher yields, higher interest rates, all right? And this is based on what we've seen the bond market doing, but also how strong the economy is looking for 2022. Now, looking into JPMorgan CEO, what he also said yesterday, pretty much that 2022 could bring more than 4 rate hikes, but he also see that this might be one of the biggest year of the economy. This might be, one of the biggest growth into the economy so far in the entire history of the US economy. So based on this, I'm expecting some people to actually follow because, pretty much, again, anytime JPMorgan speaks, people tend to pay attention closely. Now, if you also look at what, Chamath, another billionaire, said, he said that people are kind of waiting to see what the direction of the market will go before they can actually start allocating trillions of dollars that they have, sitting on the sidelines on the market, because if you really want your money to grow, the stock market is like one of the biggest machines you can use, the biggest tools you can use in order to make that happen. Billionaire Chamath Palihapitiya sees U.S. stocks rebounding rapidly as trillions of dollars rush back in from the sidelines. He's one of, the billionaires owning a couple of companies that are doing good, especially SoFi, when it comes to refinancing student loans. So he kind of knows what he's talking about when it comes to what to do with the money on the market. Now, based on this, kind of summarizing what this happened and what it means for the economy and for the stock market in 2022, here is my take. Here's my final thoughts. First off, the stock market is composed of companies. And those companies, they need to make money. If they continue to grow, if they continue to make money, if they continue to prove to the to investors, people that are putting money onto those companies, that they can still continue to have, bigger profits, bigger businesses, that they can continue to grow as companies, then that will be reflected into the stock market, because the stock market is literally composed of those companies. And I believe that even though 2021 was a record year for the markets, I still believe that 2022 might still be another year where we have decent growth, decent profits of those companies. So that's the number one driver that I can see for the markets going higher in 2022. Not as crazy as it was in 2021, but decent. Maybe 6 to 8%, maybe 10%. Why not? We never know. So that's number one. Number two, about this inflation thing, I really believe that people are kind of overreacting a little bit, exaggerating a little bit, because the number one issue of inflation is caused by supply chain issues. And I shared with you another video last week that these supply chain issues were soothing a little bit. They were getting a little bit, easing a little bit on the economy. Hence, we might not see as much tension on inflation. Maybe not based on December, but as we get into 2022, I believe that will kind of, go back down a little bit, because prices cannot continue to go up, up, and up, because people are not buying the same stuff they used to buy back in 2020 because everybody was locked down. Same thing with 2021, same thing on December, when you have people traveling, people kind of wanted to regain a sense of normalcy to what they had before this pandemic started. So I think based on that, inflation is gonna, back down a little bit, hence giving a lot more relief to some people that are fearing that's gonna be one of the number one driver of the market down. And finally, the number three item that I believe is going to continue to push markets higher is the fact that really, as Mr. Chamath said, we have trillions of dollars sitting on the sideline. People are still investing in the stock market, especially when you take into consideration retail investors. Retail investors now, especially millennials, are now most active than ever before onto markets, meaning either they're buying individual stocks, ETFs, or crypto. That money is still flowing into the market. Again, it may not be at the same levels as we saw last year, but somehow it is still very, very active. And they are, one of the participants to count in when it comes to people moving the market, especially when you look at what happened with stocks like GameStop, AMC, and crypto especially. So based on this, I think that 2022 might still be a decent good year for the stock market. It may not be as crazy like 25, 26% return as we saw last year, but I think to a range close to 6 to 10%, it's something we can expect. Now, all the pockets of the market, to end this video, all the pockets of the market may not be, to the same extent in terms of returns, because when you have interest rates rising, some pockets of the market will gain much more return, have much more profits, and pushing stocks of that sector higher. Same thing when it comes to inflation. When you have inflation, some sectors of the market tend to go higher, hence pushing stock price of that sector higher. So if you're interested in knowing those sectors that are going to benefit from what 2022 might bring on the stock market, then please make sure you don't miss the next video when I'm going to post on the best stocks to buy, or the best ETF, or the best sectors to invest your money in 2022 if you want to have decent gains. So that's it for the video, folks. I'm going to see you in the next one.